Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm coming to you today from Da Nang, Vietnam, where I've been surfing. The waves here are incredible. I had dinner with my surf instructor, Matt, last night. Terrific guy from Sweden who is somehow teaching surfing in Vietnam. Great instructor. Rob, what about you? How was your week?
Not as exciting as that, Gary. I have been battling whatever crazy bug has been going around here, and it seems like all of California, actually, based on the people I've been talking to. But we'll see. But so far, no panic, no five ring alarm. So I'm doing better, feeling better today. I think coming out of it, but yeah, not surfing in Vietnam. So I think you've got me beat in terms of who's doing interesting things over the last week or so.
Well, I got to give Matt a lot of credit. At the end of the lesson, I was out there on my own, picked my wave, paddled in, got up, rode it into the beach, stepped off like a ballet dancer going to lunch.
I would love to see that on video, so I'll have to call up Matt and request some footage. Gary, we're getting
Yeah,
into a good
the
issue.
thing, just so you know, the thing we don't have footage of are the 50 wipeouts where I literally rolled over with the board. Those were not so good.
Yep. Great stuff. Gary, this week we got the I was wrong about Doge issue. I saw the headline. I was really excited to dive into this one and see what exactly you are talking about. We're talking the penny CPI report and getting into some tips for investors or beginning investors here at the end of the five things. Gary, we're going to start with Doge. You're saying that, hey, Doge is proving skeptics wrong, you being one of them. Thing number one, Gary, I was wrong in quotes. Doge lives up to promises.
Yeah. So, Rob, you think Doge was a waste of time? Think again. Here's why. I was just wrong about this one. My original view was it's a great idea. I'm strongly in favor of cutting government spending, as any DKI reader or watcher knows. But I just felt like, listen, both parties overspend. Congress is invested in overspending. Once Congress allocates funds, it's very hard to cut it. And, I made the mistake that Peter Thiel warned everybody about. Last week, Peter Thiel said no one should underestimate Elon Musk. Thiel was right, and I was wrong about this. The amount of fraud and waste that Doge has found exceeds the wildest dreams of even the most ardent libertarians. Even the most small government people, I think, did not expect this level of obscene waste. We saw Doge terminate 104 government DEI contracts across 30 federal agencies. That saved over $1 billion and reinforced Martin Luther King's message that we should judge each other by our character and capabilities. Doge shut down the U.S. Agency for International Development, which looked like an agency that was invested in foreign aid. It turns out that we were funding DEI musicals in countries that didn't want them. It was funding independent media, which was not independent, with written instructions for things like large-scale social deception. This is what our government was doing. Literally signing media contracts for large-scale social deception. There's also evidence that USAID funds were used to try to overthrow democratically elected governments in other countries. Let me ask you, Rob, does that sound like a foreign aid budget, or does that sound like a CIA Black Ops budget?
Yeah, scary stuff there, Gary. Gary, I know one of the things we've talked about is trying to look for an independent media. Where are we getting our news sources? Who are we hearing from? Do you think that we have that right now?
We 100% do not. And, the media has understandably over the last few years been screaming in public about the importance of a watchdog media and independent media. And I would agree with them if that's what they were. But what we found out was these thousands of media outlets, not only just in the US, all over the world, are getting paid by the US government, and one particular political party is paying media millions of dollars. And we saw Politico, they were selling $10,000 subscriptions to people. I mean, listen, I wish I had been smart enough to go to Washington and say, hey, why don't you guys all pay me $10,000 a year? I'll tell you what's going on in the stock market. So the media, they're paid, they're bought media. It's not real. And by the way, the cover up has been incredible. Rob, one of the biggest areas of fraud has been in the Social Security area. They've discovered people getting paid who have no Social Security number, and people getting paid multiple times on duplicate Social Security numbers. My recommendation is call authID. They've got a biometric security system that would eliminate all of this, right? authID can fix this. They don't want it fixed. And the worst part about this, in my opinion, is the media, rather than getting angry about the funds being used to secure the health and safety of our senior citizens being wasted and all of this fraud, they're trying to cover it up. And that tells me they're not independent media. They're bought.
Elon Musk, I think, said it best. He was saying, okay, either one of two things needs to happen or is true. Is either one, a lady that is 150 years old, we need the World Book of Guinness Records out at her house to interview her, talk to her, or she's dead. One or the other. We can't have it both ways. Super interesting, Gary. For you, what do you think are going to be those next targets for
I think they're focused on two places in particular. One is CMS. That's the agency that disperses Medicare and Medicaid funding. And people will get angry about that. And the media is going to say, oh, no, you want to cut, medical care for seniors. No, they want to cut waste. And I assure you, because I've seen how some of this happens, there is massive amounts of waste at CMS. Money is being stolen from these programs that help try to keep Americans healthy. Cutting that waste will be crucial. And they're also going to be targeting the IRS. And the thing about this that's kind of funny is, the last administration hired 87,000 IRS agents to audit us. And now it turns out the IRS is going to be the one that's audited. I don't know what's going on there. I have zero evidence of any kind of fraud at the IRS. The very infrequent dealings I've had with them have actually been productive and reasonable. I also think people like to get mad at the IRS. They blame the IRS. It's actually not their fault. It's Congress that sets the tax levels. It's Congress that sets all of the regulations. It's easy to get mad at the IRS, but paying your taxes, if you're not happy with your tax bill, that's not the fault of the IRS. Blame Congress for that. So I'm sure they're going to find a lot of fraud and waste at CMS. I don't know what they'll find at the IRS.
I won't tell anyone on the team to put the headline for that video or clip Gary. Gary defends the IRS, and then we'll let the crowd decide what they want to do with that.
Yeah, great. I know people are going to say that, now I'm defending the IRS. I'm not. I'm just not mad at them. I don't think what's going on is their fault. We should put the blame on Congress. And it's 100% probability this gets misinterpreted by someone somewhere, and they're going to have a hot take on it that is not accurate, but whatever, print your comments in the, print whatever you have to say in the comments. We'll deal with it there.
Good stuff. Moving on, Gary, we're talking about the penny, the 1 cent coin you got here in the subtitle. 99-cent discounters wept. Thing number 2, Gary, Trump orders minting of new pennies halted. Gary, why do we care about this?
Yeah. So, Rob, can we finally say goodbye to the penny? Let's talk about what that really means, what it means for you, for all of us. So on February 9th, President Trump ordered the U.S. Treasury to halt the minting of pennies, citing the rising cost of production. Now, it has cost the U.S. government more than a penny to create the penny for decades now. But, the recent statistics are it costs the government 3.7 cents, almost 4 cents to produce a penny. In 2024, last year, the U.S. Mint produced 3.2 billion pennies, which created a loss of $85 million. And it's, kind of a common sense move to say this is ridiculous. At this point, if you're watching this and you're saying, I want the penny, I'm going to ask you a question. If you're walking down the street and there is a penny on the ground, on the sidewalk that people have stepped over, are you bending down to pick it up and put it in your pocket? I don't know. I don't at this point. Now, people wonder what's going to happen. There's a 1989 bill. By the way, credit to DKI intern Josh Reeves, who found this. Don't ask me where he's getting his info, but Josh, great research. He's a deep research guy. Super impressed with him. He found there's a 1989 bill that mandates rounding transaction amounts to the nearest 5 cents if the penny is removed. That's where we are right now. It won't change your credit card bill, but, it will affect what low-income consumers pay, who rely more on cash transactions.
Gary, yeah, I guess that's my question is, how much does this really matter? Is this actually affecting someone's standard of living?
So here's the deal, Rob. It's a smokescreen, right? It's really easy to say that, okay, a poor person, a low income person goes to Walmart and they have a bill that comes from, to $25.03. And instead of that, if they're paying cash, they're going to have to pay $25.05. And somebody's saying, oh no, they've lost their 2 cents, right? And that will happen, and that low income person will end up paying 2 cents more in that particular scenario. And so people are acting like that's the problem. That's not the real issue, Rob. That's a smokescreen. The real issue is the constant debasement of the US dollar. Think about the fact that the penny used to be worth something, right? You would go to a sandwich shop and a drink would be a nickel. A sandwich might be 12 cents. It is the constant over spending in Congress, the constant debasement of the currency, the constant inflation as a result of that, that's made the penny worthless. And that's made the standard of living really difficult for low-income people in the United States and really all over the Western world. Every developed economy is having this problem, and plenty of other countries as well. And so the real issue we have is not that we're going to lose the penny and somebody might get a bill that's 2 cents higher. The real issue is massive amounts of inflation that have made the penny worthless. And what I'm desperately hoping for, because I've already admitted I'm wrong about this, is I am really hoping that Doge is able to cut government spending, and that can that can slow inflation down.
Great stuff there, Gary. And we'll be sure to stay in touch with everything happening with the penny and, more importantly, inflation going forward. This is the I was wrong about Doge issue. Those are Gary's words, not mine. You're watching Deep Knowledge Investing, the 5 things. Be sure to head to our website, deepknowledgeinvesting.com. Sign up for a free subscription. You'll be notified of the 5 things on a weekly basis. Be sure to subscribe to our YouTube channel. Leave a comment, question that you have for Gary, and we'll be sure to touch on that question if it happens to make it on the show. Gary, moving to thing number 3, we're talking CPI report. You got in here. Will DKI be mature enough to avoid saying, I told you so? I'm not going to bet on that. Gary, thing number 3, January 2025 CPI report comes in hot with an exclamation mark.
Rob, your bet would be correct, because the CPI report, again, shows rising prices. Let's talk about what's really happening in the economy. And by the way, we said so. We told the Federal Reserve, we told everybody throughout the entire year and up into the September rate cut, don't cut rates. You don't have inflation under control. So I was not mature enough to avoid saying, I told you so. This is one that we got right. We were wrong about Doge, but dead right on the Fed and inflation. So here we are. The January CPI, which is the last CPI from the prior administration, a lot of people are blaming President Trump for this. No, this took place before he took office. It rose again last month to 3.0%. That was above last month's 2.9%, also above expectations. Even greater concern, the monthly increase was 0.5%, which doesn't sound like a lot. That annualizes to 6.2%. I'll remind everybody again, the target is 2%. And that, in my opinion, is 2% too high. The mandate of the Federal Reserve is stable prices. That's 0% inflation. Right now, we're clocking in at 6.2%, not even close. The core CPI, which excludes food and energy, was up 3.3% and 0.4% for the month. Both of those were above expectations. Food inflation was up. Eggs are getting a ton of media attention. Energy and vehicle prices had been tailwinds for the CPI, but in recent months, those are up. Services pricing remains sticky and has been so for years. This has been a disaster for the Federal Reserve. As much as we were saying, don't cut, you can see on the chart that we provide, you can see the inflection point in September, right where the Federal Reserve cut rates, the CPI started increasing again. Now, we think the CPI is understated, but either way, inflation is rising and a larger and larger problem every month. despite knowing his economic history, Jerome Powell has committed the Arthur Burns mistake of letting up on the Fed funds rate before he had inflation under control. This is what led to the massive double dip inflation in the 1970s, and it was a gigantic problem. Everybody, hang on, it's going to get worse.
Gary, talking about Doge earlier and circling back to Doge again with my follow-up. I mean, how does Doge affect this? What's the risk there?
So, Rob, that's the $1 million question. That's actually the $1 trillion question. Basically, what deep knowledge investing has said for years is that inflation is not being caused by COVID or supply lines or Vladimir Putin or the boogeyman. Inflation is being created, it's being caused by massive overspending out of Congress that leads to an expansion of the money supply. When the money supply expands faster than the amount of goods and services in the economy, you have an increase in the price index. That's what we're experiencing. And so I've spent the last few years saying Washington needs to cut spending, and they desperately need to. Now, Doge is working really hard at cutting wasteful government spending. Depending on whose numbers you're looking at, they are already at the rate of cutting $1 to $2 billion of spending a day. They need to get to something like $4 billion a day to get above $1 trillion a year. That adds up to real money. Here's the potential issue. And I'm in favor of Doge cutting this wasteful spending and fraudulent spending. And I mean, we should not be handing out Social Security payments to people who are dead. We just shouldn't be committing fraud. But the issue is we have right now what we've referred to here at Deep Knowledge Investing as a Potemkin economy. It looks good, but it's not real. And so what's happened is the amount of increase in debt that we're having every year is greater than the increase in GDP. And what that means is that the government in wasteful spending is creating a really good GDP number while the productive private economy is suffering. So right now we have basically a recession in the private economy, and we have inflation that leads to stagflation. So the risk here is that if Doge succeeds in cutting spending, and I'm in favor of this, we're going to end up with basically a temporary recession as everything resets. Now, it's going to be painful for a little bit, and President Trump was smart to warn about that. He said, look, guys, if we fix this, it's going to be a problem for a couple of quarters. And I agree with him. It is medicine we need to take, because the alternative is that the government keeps wasting money. We keep printing fake high GDP numbers, and we all pay for that with more inflation. And so I don't think anyone wants that. We're going to have to take our medicine, but it's going to be painful for a couple of quarters if they succeed.
In Doge, we trust. Gary, moving to thing number 4, we're talking about the Consumer Financial Protection Bureau, CFPB. And Gary, you're saying a shakeup's coming from Trump. Thing number 4, big changes coming for the CFPB. Tell us more about that, Gary. I know we spoke about this bureau a few weeks ago.
Yeah, Rob, this is a complicated one. And the question is President Trump's CFPB shakeup good or bad for consumers? Let's break it down. So first of all, President Trump took significant steps to reduce the influence of the CFPB. That stands for Consumer Financial Protection Bureau. On February 1st, he dismissed the director, Rohit Chopra, and he moved the agency and placed it under Treasury Secretary Scott Bessent. And after he took command, Bessent immediately halted all CFPB activities. They put in a new acting director, and they've paused all CFPB oversight of financial institutions, including investigation and enforcement actions. What this did was effectively eliminated an entire category of government intervention in private financial transactions. And so, look, the CFPB had good stated intentions, but many of its regulations increase costs for banks, and those are passed on to consumers. Efforts to reduce credit card late fees and limit overdraft fees were popular, but again, these things seem consumer friendly. They harm responsible borrowers by raising interest rates and encouraging late payments and reducing credit access for low-income individuals. As always, when the government puts their thumb on the scale, it leads to problems. It's a very complicated topic.
Yeah, Gary, it seems like it is much more complicated than this. Can you elaborate a little bit more? And then how has the CFPB raised prices for consumers as well?
All right. So Rob, let's actually talk about this. One of the things that DKI tries to do when we talk about these things is we always say we're going to talk policy, but not politics. But let's actually break down the partisan influence here, because there are some places where Democrats are pointing to examples and they're standing on solid ground. So the Democrats are saying, look, we don't want to see people abused by large financial institutions. And, some of the late fees were ridiculous. Some of the, a check overdraft fee might be $50, which is far in excess of what it costs the bank. Some of the interest rates were, what a reasonable person would consider to be abusive. And some of Rohit Chopra's initiatives, and he was a Democratic guy, they did have potential benefits. They were bolstering data privacy, eliminating junk fees, regulating buy now, pay later services, which we've pointed out previously as abusive. They've improved credit reporting accuracy. So when Democrats point to these things, they're standing on solid ground. This is a situation where their arguments make sense. Okay, now let's talk about the Republican side of it. And they're making two key points. One is that these agencies are interfering in the private markets. And so when you come in and you say, we're going to fix prices, we're going to limit fees, banks, they can only charge a certain amount, that doesn't lower the expenses. It merely moves the burden of those expenses from the people who are paying it to people who are more responsible, right? And so if you're paying your bills, you could look at this and it's very easy to say, well, we don't want to see poor people get hurt. Great. But guess what? You're now going to pay those fees. More importantly, when you fix these fees at a level below where the market would set them, what the government will do is encourage these banks to say, you know what, don't serve these people. Now, that's not their intention, but if the banks can't make money serving people, then those low-income people are going to lose access to the banking system. Now, one solution to that is Bitcoin, but we're not there yet. I would love to see Bitcoin replace a lot of the banking sector, but we're not ready for that at this point. And so Republicans are making a great argument here that, hey, we see what you're trying to do, but the effect of that is going to be to remove banking services from people who need them. The Republicans are also claiming that Democrats were using the CFPB for questionable partisan goals, basically using it for Democratic money laundering. I don't know. Maybe yes, maybe no. I haven't really looked into it. I think these are things that Doge should be looking at. We should be eliminating that kind of thing. But I do think this is a really complicated issue where both Democrats and Republicans have some reasonable points. In general, if you're asking me my opinion, I'd like to see the government making fewer regulations and incentivize banks to serve these people rather than provide the rules for how to serve these people. And I think, arm's length transactions tend to be best. But again, this is a complicated one.
Yeah, great stuff there, Gary. And thanks for the deep dive into that thing in point number 4. Gary, moving to thing number 5, we're going to wrap up today with investor education. Gary, thing number 5 today, if you want to start by just giving some tips for beginning investors, and then we're actually going to get into a little rapid fire round here at the end and just get your quick thoughts on a few key points for those new beginning investors that are starting to get into the market or starting to want to understand more about the market and positions.
So, Rob, let's give this a little bit of an introduction, and think back on, for a lot of the young men watching this, think about, when we started as little leaguers, right, playing baseball. And you start by hitting the pitching of 10-year-olds, right? And even younger than that, they usually have like a dad or a coach pitching underhand. And then, you get a 10-year-old pitcher, and then you get to high school, you face high school pitchers, you move on through colleges, the minor leagues. And then when they're ready, a few people get to face the very, very best pitchers in the world, and they get to work their way up. It's not like that in the stock market. Our schools don't teach basic finance. And in the stock market, on day one, you want to invest, you're facing off against Citadel, Millennium, BlackRock, Fidelity, and of course, DKI. right? On day one, you're going up against the best in the world and people who have been doing this for decades and have resources beyond what a beginning investor has. So let's talk about it. If you want to avoid rookie mistakes in investing, let's talk about how you can make smarter choices today. And Rob, I know you got a rapid fire lightning round, so let's go.
Cool. Gary, let's start with the most fun one and probably sometimes most polarizing meme stocks. I want to get that 10,000% return. What's all the rage? Should I be investing in these? What are they?
Yeah, so there's a lot of excitement about meme stocks, non-Bitcoin crypto, zero data expiration options. And the reason people are drawn to it is it's fun, it's exciting, and if it works, you make a lot of money quickly. People on these zero data expiration options, they might make 40, 60% in a day. Non-Bitcoin crypto and meme stocks, they're making more than 100% in a day. And it's great until you get wiped out. Right. And so these things are likely to result in massive losses over time. If you are not an experienced and nimble trader, I would say that doing something like this is like going to a casino where you can win a ton of money and then on one roll of the dice, oh no, you lost your whole bankroll. I would avoid this. If you really want to have fun with this, set aside a tiny percentage of your assets. Do it for entertainment, like you might bet on a football game with your friends, a few dollars at a time, or just go to a casino. But don't consider this investing and don't put real money that you can't afford to lose in things like this.
Gary, moving on. Should I listen to the media when it comes to investing?
Absolutely not. The press is not your friend. Here's what I want all of the amateur investors to know, that by the time it is being discussed in the Wall Street Journal or on CNBC, professional investors have already responded to the information. Professional investors have not only seen it, they've responded. In fact, I'm going to give you a great example. Last week, Josh and I worked on the CPI report, of something we talked about earlier in this episode. The amount of time it took me to absorb the entire CPI report and know what it meant was under 1 minute. It took 30 to 45 minutes for Josh and me to put out a 10-page report for people to read. By the time you are reading it, by the time anybody has had the time to write it, professional investors already know, the market has already reacted. At that point, the futures markets were already down, right? So I know what's happening, but by the time I can write it and get it out to people, it's already stale. The futures markets have already moved. The press is not your friend here. You should be doing your own work or subscribing to services that will help you and thinking longer term. Do not be trading the headlines if it'll be too late by the time you see it.
Gary, moving into what you should be looking for, if I'm looking to invest in a beginner and I am a beginner, what should I be looking for in the businesses that I'm deciding to invest in?
Let's start by looking for businesses you understand. Some businesses are really complicated. And if you don't understand a business, that's fine. Read about it. Just go read about what they do. You can literally pull their annual report, and the first 10 pages of the annual report will be a basic description of the business. They'll tell you what they do. Mm-hmm. And then I would tell you, don't just look at the company itself, look at their end markets. And so this was something we talked about in last week's version of the 5 things. So everybody listening to this, you probably know what NVIDIA does, but then look at the spending plans of NVIDIA's customers. We saw Meta, Facebook, Alphabet, Google, Microsoft, they all were increasing their AI-related CapEx. And so when we see that, we know, okay, great, they're going to be buying that Blackwell chip that NVIDIA is coming out with. And so look and understand the business and then just go to the next level. And none of this is complicated, but it does take some time and effort, and spend some time reading about these things. You don't have to become the world's greatest semiconductor expert, but you should have an idea of what these companies do, who's buying their product, and how those companies are doing. Start with those basics, but invest in things that you understand.
Great stuff, Gary. I could not agree more. I think that's a great jumping off point. Gary, I think one of the other things is like numbers, finance, accounting, right? How much do I need to know about those things in order to invest as a beginner?
All right, that's a complicated one. Let's simplify it. So my first job out of school was doing mergers and acquisitions at Morgan Stanley, and we were spending 80 to 100 hours a week building financial models that were insanely complicated. You do not need that expertise, right? It helps me that I have it. You don't need it. Let's talk about the basic things to look for. And again, remember, you're looking at businesses that you understand, where you understand what they do. So let's talk about basic financials. You want to look for high revenue growth, improving operating margins, right? So as revenue grows, does the company keep a larger percentage of it? Look for rising earnings. Know if the cash flow, look at the cash flow statement, know if it's positive or negative, if it's growing or shrinking, right? And so some people will say, wait, I don't know where that information is. Really simple. SEC.gov, that's the Securities and Exchange Commission, that's their website. It is a free and publicly available website where companies will file their reports. Now, the annual reports are called 10K, and the quarterly reports are called 10Q reports. And so if you go, you can see the income statement, you can see the cash flow statement, you can track whether revenue is growing, you can look at their operating margins. Just divide operating income by revenue. Is that going up or down? Look at the cash flow statement. Just look at cash flow from operations and subtract from that capital expenditures, right? And these are all line items there. These are basic calculations that you can do with basic arithmetic. Now, is it as much fun as betting on a meme stock? No, it actually requires some work. But I promise you, if you are watching this channel, if you are subscribed to this channel, doing this basic arithmetic is not beyond you. These are things that you are capable of yourself. And if you want to learn to invest, these are the basic places for you to get started. None of this is beyond you. You can do this, I promise.
Gary, we got a few more questions. We'll go rapid fire with these last three. Gary, if I was looking for some information, who are people you'd recommend I follow, listen to? Where are you going to for information online?
I think the key thing is you want to find useful predictive sources that speak to you at your level. If you don't understand it, find something more simple. A book that I read when I was in college by Peter Lynch, One Up on Wall Street, I think it's still relevant and can be understood by new investors. On macro, I really like Lynn Alden. Unicus Research does incredible research on short selling. They'll teach you what not to do. If you like energy, I like Mark Rosano, Big Oren on Twitter or X now. Tracy Schuchart is terrific. She's posting all day and terrific to talk to. And of course, I'm going to recommend Deep Knowledge Investing. Many or all of these services do offer a free and a paid option. Following them on X is free. And what you can do is sign up for their free option. If you like it, if it's useful, then do the paid option. You don't have to throw a lot of money at this right away. You're not going to become an expert by throwing tens of thousands of dollars. Start with the free option. Start by following good people on X and start to learn and figure out, where you want to go next.
Great stuff. Could not agree more, Gary. And yeah, head to deepknowledgeinvesting.com. Check out our premium subscription options and the access that you'll get to the DKI portfolio as well as Gary. Gary, I got two more for you real quick here. First one, how quickly should I be trying to make money back when I'm investing in the market?
Take your time. It's okay. If you're not ready to invest in individual stocks yet, then start with index funds and invest a little at a time. It's called dollar cost averaging. Maybe you put in $50 a week or $100 a month or whatever you can afford. You don't have to figure it all out immediately. You don't have to commit capital before you're ready. The basics are fine. Proceeding slowly is fine.
Amazing. And Gary, finally, who should you go to for help, right? I'm a beginner investor. I know you mentioned some people online, but who else out there is someone from a personal connection standpoint that I can go to for help in the financial markets?
So, Rob, the people I was mentioning before are the primary sources. Those are the people that I read and talk to, and those primary sources are terrific. But if all of this is overwhelming and it's more than you want to take on yourself, it's okay to go to a financial advisor. Not all of them are great, but we work with some of the best at Deep Knowledge Investing. Reach out if you want professional help from somebody registered to do that. And I am not a registered investment advisor. Let's make that clear. I am not registered to do this. But if you guys want help, I will be happy to connect you with somebody that I respect At that point, you talk to them, you make your own decisions, you decide yourself if what they're offering is right for you. And it's okay if it's not, but we can point you in a direction that I think is wise. At that point, you make your own decisions.
That concludes this week's edition of the 5 Things, the I Was Wrong About Doge issue. Be sure to subscribe to our YouTube channel. That way you'll be notified about all the upcoming breakdowns, shorts, as well as next week's 5 Things. Head to deepknowledgeinvesting.com, grab a free subscription. You'll be added to our email list, and you will not miss a newsletter, portfolio update after the fact, right? And any of the new items that are coming to the DKI website. Again, premium subscriptions, gate, current recommendations that Gary's making, as well as when Gary's exiting a position. Otherwise, you have to pick up some crumbs when we're talking about certain portfolio positions on the 5 Things or in other reports. Gary, turning it over to you for the final words.
I just want to thank everybody here. Rob, I know it's been tough for you filming this at weird hours when I've been in Asia. I really appreciate you and the team over at Flying V. They've been amazing. Love what Nazim is doing with the channel. As we pointed out, we just crossed 1,000 subscribers last week. And thank you to everybody watching this. We know your time is valuable. Thank you for spending it with us. And I will look forward to speaking to you next week with a new edition of the 5 Things coming to you from Seoul, Korea next week. Looking forward to that.
Thanks, everybody.